Hey everyone, welcome back to CryptoCache. Thank you again so much for joining me here. We're going to take another look at Bitcoin. Big surprise, right? That's half the reason probably why you clicked on the video. Maybe the other half is unknown. What we're looking at, of course, is more important stuff such as liquidation levels, key Fibonacci retracement areas, because we got our fibs pulled out from the top to the bottom here essentially, because we're expecting the price to come up a little bit higher. We saw that resistance halfway through the CME gap. Keep in mind that CME gap is upwards of 61,800. We caught a wick up to about 61,000 here on this chart. It is a little different, by the way, on actual CME futures. They had a bit bigger of a fill. So majority of that CME gap has been filled. So just kind of keep that in mind. That does imply that the price action has swept a majority of it. Now, usually it's going to fill the entire amount at some point. So we could still presume the price is going to continue higher. We're working ourselves, however, into a type of flag pattern here. So if you kind of just look at this, this is generally construed as a bear flag when the price action works itself into a type of channel, and the price action will effectively continue lower eventually. Okay, I'm hoping it comes back up at least to the 62K mark so we can short our shirt off there. But once again, it just depends on a lot of factors here. The price dumped almost immediately as soon as we took a long position, and that's just par for the course. How many times have you done that? Buy long, buy low, try to sell high, price goes straight down. It's okay, folks. It's kind of the way that it goes. Technically, the TA on that coin is still good. I'm referring to ICP as a matter of fact. But let's quickly look at Bitcoin, liquidation levels, and kind of see what's going on here. I want to say thank you again to everyone who's watching. Appreciate you liking the videos as much as you have. I know a lot of folks do that every single time, and it's really, really cool. Appreciate that very much. So we can continue that. Maybe we can get this in front of more people and help those Moon Boys become a thing of the past. It'd be nice, right? Anyways, no offense to them. Obviously, 100x leverage serves a purpose once in a while, but just know that's not what crypto is all about. If you want to be really good at this, you got to kind of have good risk tolerance, and risk tolerance really just implies that you're going to take less risk and more reward, essentially, right? The R&R ratio has to be higher. Anyways, Bitcoin. Last 7 days, we can see heavy amount of concentration here between 56.7 and 57.7, okay? That's just getting more and more concentrated, basically implying anyone who's taken a long since, yesterday, is in the green, but they're also more than likely in a position right now where they could get swept here hard, right? Again, they felt pretty confident up at about 61,000. Why they're still holding longs from from 57.7, that's beyond me. But again, just different strategies for different scenarios. And I can tell you a good strategy is to take profit in this market. Trying to get super greedy. All the more reason why I have multiple profit targets, to kind of help trim in and out of the position, right? That's generally what you want to do. Either way, the concentration here above the price action, we've known this for a while, 65,300. Upwards of roughly 67K is a pretty monumental amount of liquidation. Each one of these bars represents somewhere between 5 to 10 billion. Okay, that's a lot. Okay, that is a lot of liquidation there. So I think we're a long ways from that. Even if when the price came up to the 61,000 range, I was still not expecting it to continue any higher. Thankfully, it pulled back, but it's a bummer. We missed our short. I was trying to short at 61K, and the price just continued to run. So that's what's going to happen, folks. It's going to happen all the time, and you just kind of got to get used to it. It's unfortunately, it's just kind of par for the course. The key takeaway is that you don't want to get frustrated by the market, and yeah, it kind of blows that you can miss opportunities. It happens all the time. There's going to be plenty more, so try not to worry about it. But I can see how frustrating it can be because, I was wanting to take that short at 61K for Bitcoin, for example, but I wanted to analyze the charts, make sure I jump in, explain why. By the time I got done doing that, it was already at 60.6. So it's okay though. We didn't get our fill, and that's all right. What we want to look at is new opportunities. Do we take a long back up to that range, or do we wait for that range to happen? Generally speaking, you're going to probably hear me err on the side of caution and say you want to wait until we get there before you take a trade. Generally speaking, that's kind of the best way to approach it right now. But there's a solid chance we could see further downside at this point. We're kind of already ABCing our way out. Anyways, let's take a look here. We can see with the SMAs that we are still below the 20-day SMA. All the more reason why you want to wait for that level to be closed above before you take a long position. Again, I would be careful taking a long at 60,000. And that's proven to be not a very strong support or resistance level. But once again, the 20-day SMA hanging out right there does imply that we're not on the right side of tracks, so a long position doesn't make a ton of sense. In fact, shorting at 60K would maybe be more probable or beneficial at this point based on what we see here so far. We may not even see a revisit of that 61 to 62K range, which is kind of the area that I'm hoping to get a short at. MACD is diverging here. Hasn't fully diverged yet, but looking probable. We can see we're under 50 on the RSI still. Nothing's changed there. Stochastic pulling back with money flow index increasing. It's good to see MFI up. That's generally a good sign, implying that we're having a lot more buying pressure in this range. But we're right here at this local point of control. Again, 59.3 is that pretty consistent number. I think if we zoom out, if I'm not mistaken, we're probably going to see that as a fairly consistent number too, right? So the easy way to understand it is that if we stay below 60K, we can expect the price to continue lower. Yeah, so I guess the best way to interpret this is that, over 60K, you maybe want to consider a long. Under 60K, you want to maybe consider a short. Again, it's not that black and white, but that's the overall sense. Okay, 4-hour time frame. We're looking at 50 on the RSI was denied pretty hard. We're now stochastically diverging, and MACD got a little FU there. That's exactly why you be careful taking a 4-hour MACD convergence when there's other things on the charts kind of screaming bearish divergence. When I talked about this earlier today, I mentioned the price action being more likely to pull back than increase, and that was mostly based on other moving averages being under 50 on the RSI on the 4-hour and the daily, as well as multiple moving averages on every single time frame. Okay, right now nothing has changed. It's obviously gotten worse, so there's no reason to consider a long. Really, it just doesn't make a ton of sense. Different strategies obviously can apply here. In hindsight's 2020, like yesterday I said don't take a long and the price went up. So obviously missed opportunity there, but there was no option to want to take a trade, no confirmation that I like to look for. Speaking of confirmation, let's go ahead and see what the hourly tells us. We are within and/or near the lower lead on the cloud. The lagging span is now within the price action, and the conversion line is squeezing, compressing at the baseline. That is exactly 3 out of 3 reasons to not take a long position, and 3 out of 3 reasons not to take a short position either. It kind of sucks, doesn't it? You just wasted 6 minutes of your life watching me until this point to realize that I'm not going to give you a direction. Well, I'm sorry. If you don't like that, you're in the wrong place, but that's just how it works, folks. That's what analysis is all about. If you're going to keep searching for the answers that you want to find, you'll find them, and it may not be the best. The way to understand trading is that 95% of what you're doing right now, when you look at the charts, like what I'm doing, for example, is identifying areas of opportunity. More importantly, areas of opportunity to not take a trade. In other words, you want to look for reasons not to take a trade versus the other way around. And at this point, we've convinced ourselves this is not a good trading scenario, okay? So don't force a trade, try not to get crazy. When we took our long position earlier for ICP, for example, it had multiple bullish convergences. It was looking pretty. As long as we didn't lose 60,000 on Bitcoin, we were fine. What do you know? We lost 60K on Bitcoin. That's just how it works, okay? So again, I'm trying to normalize this because it's very, very true that these feelings that you have are, they're fleeting, but they're also, I want to validate them too, because there's nothing wrong with feeling like, this is a bad market, because it really is. I've traded for over 20 years in traditional markets and this, crypto, of course, and I can tell you the last few months has been just tumultuous garbage. Ever since big money got involved, it's been pretty choppy, okay? Again, the chop, you have to be able to calibrate and use lower leverage to offset that. So hypothetically, you're going to take along with Bitcoin. Maybe you're just the kind of person who likes to flip a coin and hope for the best. If you do that, just use low leverage so the price comes down, you don't get liquidated. That's, I guess, what I like to ask. But otherwise, I would recommend just pumping the brakes. It's okay not to take a trade. Yeah, no problem. And if you got an open trade right now, you're trying to go to sleep, you're trying to figure it out, you probably should go to sleep and close that trade. Or close it first and then sleep. Either way you look at it, depends on your trading strategy, right? If you are a swing trader, you shouldn't have to worry about it because you just let the TA do the rest. You worry about points of invalidation. We haven't invalidated our long position, for example, with our altcoin. So there's that. All right. Anyways, I think I'm rambling again. I do this from time to time. Thank you again so much for listening and learning. Look forward to seeing the next one. Have a great rest of your day. Take care.